Hey, I'm Airam. Before YouTube, I spent years in global finance, from the back office at Crédit Lyonnais in Paris to handling NYSE equity derivatives at Société Générale in New York. I wrote market analysis during the dot-com crash for firstinvest.com, and after 2 decades in media, translation, and market research, I'm back to break down what really moves markets. Let's dive into what happened in Asia this morning, June 4, 2025. Market overview. Asian stock markets opened higher, driven by renewed trade optimism and political developments in the region. Leading the gains, South Korea's Kospi jumped 2% following the election victory of Liberal candidate Lee Jae-myung. Investors are hopeful this new government will pursue market-friendly reforms. Japan's Nikkei 225 climbed 0.8%, as tech stocks extended their rally, tracking strength in the U.S. market, with companies like Nvidia continuing to beat expectations. Taiwan's index also gained 2%, supported by bullish sentiment in semiconductors. China's markets posted modest gains, despite the latest Caixin PMI falling to 48.3, signaling a contraction in the manufacturing sector. India's Sensex and Nifty broke their 3-day losing streaks, rising 0.32% and 0.29%, respectively, helped by a more upbeat global outlook and trade talk buzz. Key drivers to watch: U.S.-China trade tension, or detention. All eyes are on a potential call between Trump and Xi Jinping this week. The U.S. just doubled tariffs on steel and aluminum, but this might be the start of a new negotiation cycle, not just a tariff war. Key drivers to watch. Global growth forecast. The OECD just lowered its global GDP forecast to 2.9% for 2025-2026, citing geopolitical risks and policy uncertainty. Commodities and currency. The US dollar softened slightly, and gold is now up 28% year-to-date as investors shift toward safe havens. Oil dipped slightly amid growing OPEC plus output. So what does all this mean? Today's bounce in Asia reflects a cautious but building confidence. Traders are watching for signs of policy clarity, and in markets, sometimes the absence of new bad news is enough for a rally. This isn't recycled market noise, it's insight from someone who actually worked inside financial institutions, wrote investment reports, and translated the jargon of bankers and CEOs for 2 decades. Like, subscribe, and let's keep cutting through the crap.